Good morning, investors. You are now on KleverStock with me and Nigeria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Sentiment on the local stock market remains weak after 2 consecutive days of losses, as December has so far offered few fresh domestic catalysts to lift trading activity, although expectations of a U.S. Federal Reserve rate cut next week may help stabilize the fragile mood. TA Securities said the recent U.S. labor report has revived hopes of monetary easing, the CME FedWatch assigning an 87% probability to a 25 basis point cut at the upcoming Federal Open Market Committee meeting. Malacca Securities added that year-end window dressing is expected to lend some support to sentiment, noting that technical indicators are turning positive with the MACD histogram in the green and the RSI above 50. It said resistance is seen at 1,636 to 1,641, while support lies at 1,596 to 1,601. Rakuten Trade remained upbeat about the strengthening ringgit, currently at 4 ringgit and 11 cents against US dollar, saying the currency's momentum should encourage foreign fund inflows. At the market open, the FPM KLCI slipped 0.37 points to 1,620.7, reflecting ongoing selling pressure. Telco counters led the declines, with Axiata down 9 cents to 2 ringgit and 59 cents and Maxis losing 6 cents to 3 ringgit and 80 cents, while MISC fell 7 cents to 7 ringgit and 45 cents. Maybank eased 4 cents to 10 ringgit and 20 cents amid profit-taking. At the consumer sector, Spritzer dropped 6 cents to 2 ringgit and 79 cents. Dutch Lady was down 20 cents to 31 ringgit and 90 cents. Heineken slipped 18 cents to 22 ringgit and 44 cents. And Carlsberg softened 12 cents to 16 ringgit and 78 cents. Among the actives, VS Industry added 2 cents to 48 cents, while Valesto remained at 24.5 cents and TWL stayed unchanged at 2.5 cents. Moving on to local currency updates. The ringgit opened stronger on Friday at about 4 ringgit and 10 cents to the US dollar, with firmer fiscal conditions and improved sentiment continuing to support the currency's upward momentum. At 8 a.m., it advanced to 4.1065 or 4.1155 from Thursday's close of 4.1115 or 4.1165. Bank Muamalat Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the ringgit's resilience is notable given that U.S. labor data still shows a steady job market, with initial jobless claims dropping to 191,000 compared with expectations of 219,000, while challenger job cuts fell sharply to 71,300 in November from 153,000 previously. He noted that despite these signs of labor market stability, the market continues to anticipate a U.S. rate cut. The ringgit's climb to 4.1115 or 4.1165 yesterday also marked its strongest level in 4 years and 5 months, surpassing the previous high of 4.1155 last recorded on 16 June 2021. At the opening, the ringgit also appreciated against major currencies, gaining to 5.4711 or 5.4831 versus the British pound, rising against the euro to 4.7816 or 4.7921, and strengthening against the Japanese yen to 2.6470 or 2.6529. It was also firmer against most ASEAN currencies, advancing to 3.1674 or 3.1746 against the Singapore dollar, rising to 246.5 or 247.2 against the Indonesian rupiah, and improving to 12.8116 or 12.8501 against the Thai baht from 12.8304 or 12.8520, while remaining steady against the Philippine peso at 6.96 or 6.98. Now for some local economic news. Rising pay in Malaysia's digital sector signals strong economic momentum and strengthens the country's position as a regional tech talent hub, with economists noting that expanding digital demand is lifting incomes and fueling broader economic benefits through higher spending power. The National Tech Association of Malaysia, PICOM, revealed that advertised digital job salaries are projected to rise 10.81% in 2026 after an estimated 9.5% increase in 2025 as employers compete aggressively for specialists in artificial intelligence, cloud computing, cybersecurity, data engineering, advanced automation and development roles. Now, PICOM Chairman Alex Liu said the strong 2025 salary momentum shows how essential digital professionals have become across Malaysian industries, and he expects the trend to continue in 2026 as companies intensify digital transformation efforts. He added that wage adjustment were also influenced by the minimum wage increase to 1,700 ringgit, ongoing talent shortages, the outflow of Malaysian workers to higher payer markets such as Singapore, and rising investment from global technology firms building cloud and AI infrastructure in Malaysia. Now, independent economist Jason Loh said higher digital sector wages reflect robust demand for digital services and deepen the country's digitalization while boosting workers' purchasing power and generating positive spillover effect across the economy. To sustain momentum, Loh said Malaysia must boost its attractiveness to regional and global talent beyond competitive compensation by improving livability in Greater Kuala Lumpur and the Klang Valley. He highlighted the need to address air and noise pollution, expand green lungs and interconnected parks, build more pedestrian-friendly infrastructures such as an additional walkways linking commercial districts, develop urban eco-forests like Taman Eco Rimba, and beautify the Klang River with new mini canals that complement flood management. He pointed to the upcoming Bandar Malaysia development scheduled to begin next year as an opportunity to create the most green and digitalized city in the region and a leading hub for digital talent. Moving on to corporate news update. VS Industri Berhad returned to profitability in the first quarter ended October 31st, 2025, recording a net profit of 30.63 million ringgit after posting a net loss of 33.04 million ringgit in the preceding quarter, with the turnaround driven by seasonally stronger sales and a reversal of impairment losses on trade receivables. Although revenue slipped 2.9% to 1.08 billion ringgit from 1.11 billion ringgit, operating profit improved to 50.63 million ringgit, reflecting better cost management and improved operational efficiency. The company also declared a first interim dividend of 0.4 cent per share, unchanged from last year, to be paid on January 28, 2026. Managing Director Dato' S.Y. Gan said the global environment remains challenging as macroeconomic uncertainties continue to dampen consumer sentiment, but noted that this recent interest rate cut in the United States provides some relief and could help gradually lift demand over the next few quarters. He said the group's order flow has improved in the first quarter, with several new models from existing customers having entered mass production and more models expected to follow. VS Industri has also secured a new customer with production scheduled to begin soon, reflecting what Gan described as the group's strong execution capability and ability to secure fresh opportunities. In the Philippines, utilization rates continue to rise as the company adds more upstream capabilities, including plastic injection molding and printed circuit board assembly, which enhances vertical integration and supports cost efficiency. Gan added that as an export-oriented group, VS Industri continues to closely monitor the ringgit-US dollar movement. While the strengthening of the ringgit poses some impact, the effect is expected to be manageable due to natural hedges from using US dollar-denominated proceeds to fund raw material and component purchases in the same currency, while part of its customer billings is denominated in ringgit, further reducing exposure. VS Industries said it remains cautiously optimistic of delivering a better performance in the financial year 2026, supported by a healthy customer order pipeline, leaner operations, and a strong balance sheet. The group ended October 2025 in a net cash position with gross cash holdings of 752.6 million ringgit in net assets of 56 cents per share, underscoring its financial resilience heading into the new financial year. And finally, wrapping up, we have major corporate developments and deals across Malaysia. DRB Highcom Berhad has revised its acquisition price for Spirit Aerosystems Malaysia to $110.6 million, higher than the earlier estimate due to additional cash adjustment. Al Akar REIT is disposing of its Bukit Mertajam property for 12 million ringgit, below market valuation and original cost as part of its capital recycling strategy to divest underperforming assets and strengthen its balance sheet. Now, Haley Group Berhad has secured a 42.9 million ringgit contract to build 187 terraced houses and a substation in Kulai, Johor, with works running from December 15 to March 2027. Gagasan Nadi Cergas Berhad has received shareholder approval to acquire a 69.4% stake in student hostel concessionaire consortium PAE Sepakat Sunjam Berhad for 127.3 million ringgit, funded partly through a sukuk wakalah facility of up to 330 million ringgit. Last but not least, Paragon Globe Berhad via PGB Landmarks Sunjam Berhad is selling a 5.45 hectare freehold land in Tanjung Kupang, Johor to GSP Automotive Malaysia Sunjam Berhad for 64.5 million ringgit. And last but not least, BMS Holdings Berhad, set to list on the ACE market on December 8, posted a first quarter net profit of 5.4 million ringgit on 84.8 million ringgit revenue and remains cautiously optimistic on continued sector growth supported by resilient demand and government housing initiatives. Now that's a wrap for Morning Bell Updates with me, Ainun Jaria on KleverStock. Thank you for choosing us investors. Stay tuned for the next live coming soon.